Nexgen Software Services day trading rules will be discussed in this short lesson. This lesson is based on the written trading plan. You will locate it, copy the plan on the Nexgen website. Please visit the education page for detailed lessons, plans, videos, and more educational content. Executing day trades using the T3 Fibs ProTrader Fibonacci software, you will focus on two very well-defined trades. When learning Nexgen, only these two trades should be taken to achieve maximum performance in the shortest amount of time. Trend trade entries will be taught as three separate concepts. The first concept will be making sure that the T3 trigger lines are already crossed, favoring the direction of the trade entry. When trend trades are taken, all triggers on all charts must be trending in the same direction. Remember, it is vital that you have favorable trigger lines before executing a trade. The second concept is needed to double-check for termination conditions. For specific termination conditions on the large and small charts, please refer to the trading plan section on termination conditions for examples. Always double the following: did the market reverse from a termination spot? Does the entry area have enough room before it reaches a termination spot? If the market passes the trigger line criteria, as well as the termination requirements, it will be time to look for a trade entry. The final concept for a trend trade entry will require two parts. The first, notice if small chart negative number divergence is true or false prior to the entry. The second, will be defining the entry area. This is done using the location of the two large triggers in conjunction with Fibonacci support or resistance areas, mid-band, or one-to-ones. Remember, it is important that areas are touched by price before you execute an entry. The final concept for a trend trade entry will require two things. The first is simply recognizing if small chart negative number divergence is true or false prior to the entry. This will be important for how and when you enter the trade. We will discuss this shortly in the following slides. The second will be defining the exact entry price. This is achieved by matching the location of the two large triggers in conjunction with Fibonacci support or resistance areas, mid-band, or one-to-ones. Remember, it is important that areas are touched by price before you execute an entry. To repeat this concept, it is crucial in making sure that all entries are done systematically from area of support or resistance. Trades that do not have support or resistance as an entry area are low probability and should be avoided. The following slide represents the general requirement for a buy entry, also referred to as a long trade. The trigger lines will determine the strength and momentum of a move. This is represented by the large black arrow pointing up. Once the three criteria for a trend trade are met, a trader will simply buy the support areas for an entry and place an exit order at the next resistance area. Practicing trend trades can be done during the day as the market moves, by downloading replay data from your platform and retrading the day, or by simply visually studying the historical patterns. Studying the historical charts like the S&P mini chart shown here, the rules for a trend trade are visually simple. Let us review this chart in the same order in which you would analyze the market real-time. First, notice that the bottom was made at Fibonacci support. The next important indicator pattern that you will notice is when both large triggers have all turned up. They will both be green, and the small triggers on this chart will be located above both large triggers. The other factor that makes this a high probability trade is when the triggers are located above the support Fibonacci and mid-band you will use for entry. When you see this configuration, this tells us that the market is now trending. Once trigger line trend has been defined, using your large chart, not shown here, check for a termination condition to be true. If false, proceed with the next step. If the high price does not have a negative number, representing divergence, you will place an entry at both large triggers and support. This trade generated the potential of $300 per contract. Next, after entry and price of the first trend trade goes up, it is important to notice that price has now changed the red line of resistance into a blue line of support. This, combined with the fact that the triggers are now located above the new blue Fibonacci support, suggests that the trend has a high probability of continuing up. Fibonacci and trigger line configurations and locations are the deciding factor when taking a second trend trade or adding on to an existing position. Before entry is taken, please notice that the high pivot did have a negative number representing what we call divergence. While the overall look is identical to the first trade, and entries are to be taken from support and both large triggers, the presence of the negative divergence number will force us to require a reversal bar before entry is taken. This is an extremely effective tool for trend trade entries. The patience to delay entry will eliminate approximately 70% of the losers that may happen have no confirmation reversal bar. Please refer to the trading plan on the education page of the website for specific profit target, stop loss and termination conditions. You may also ask questions during the live educational class from 9 a.m. to noon Eastern Time Zone Monday through Friday. If you prefer small group education, you may also join our 101 class at 2 p.m. Eastern Time, Monday through Thursday. If you are unable to make it to the online classes, you may study these trades on your own, then please schedule time with your sales advisor to review trades, or you may arrange a private session with an educator when it is convenient for you. Remember, once you understand the trade rules, spend time practicing the execution of the rules. Trading, practice doing replay and studying charts, does not require classroom attendance. One point that is crucial to understand as a new trader: there are many markets that you can trade as early as 3 a.m. Eastern Time, and some markets like Bitcoin that trade 24/7 including Saturday and Sunday. To reach a $400 per contract objective daily, you only need 1 or 2 high probability trades. Most of the major markets such as crude oil, Brent crude oil, gold, S&P, E-mini, will offer many opportunities between 3 a.m. and 4 p.m. Eastern Time. The following slide represents the general requirement for a sell entry, also referred to as a short trade. The trigger lines will determine the strength and momentum of a move. This is represented by the large black arrow pointing down. Once the 3 criteria for a trend trade are met, a trader will simply sell the resistance areas for an entry and place an exit order at the next support area. Practicing trend trades can be done during the day as the market moves, by downloading replay data from your platform and retrading the day, or by simply visually studying the historical patterns. Let us review this chart in the same order in which you would analyze the market real-time. First, notice that trend was established when trigger lines, price traded below the blue Fibonacci support. After the support turns into resistance, we will look for the trend trade rules. Once trigger line trend has been defined, using your large chart, not shown here, check for a termination condition to be true. If false, proceed with the next step to establish a short position by selling the market at resistance and both large trigger lines. Notice that the low price does not have a negative number, representing divergence. This means you will place an entry at both large triggers and resistance. In this case, the magenta midbands are the resistance at the same spot as both large trigger lines. While the market trades a big higher than both large triggers, stops should be placed beyond any resistance, just above the trigger lines to avoid the overrun. Next, after entry and price of the first trend trade goes down, it is important to notice that the small triggers are once again located below both large trigger lines. Again, remember the importance of trigger line locations relative to each other, as well as Fibonacci support and resistance. The trigger line configuration tells us to look for another trade short. Before entry is taken, please notice that the low pivot did have a negative number representing what we call divergence. While the overall trend trade look is identical to the first trade, and entries are to be taken from resistance at both large triggers, in this case magenta mid-band again. The presence of the negative divergence number will force us to require a reversal bar before entry is taken. Again, this is an extremely effective tool for trend trade entries. The patience to delay entry will eliminate approximately 70% of the losers that may happen have no confirmation reversal bar. Exits are generally taken at Fibonacci support. The analysis of Fibonacci and trigger lines starts over. Please refer to the trading plan on the education page of the website for specific profit target, stop loss and termination conditions. While you are perfecting your application of the trend trade rules, you will also be extremely focused on termination conditions at the top or bottom. Not only will termination conditions tell you when it is time to stop taking trend trades, if the rules are met, trades may be taken in the opposite direction. Please refer to the trading plan on the education page of the website for specific termination conditions that will be acceptable for this type of trade. The rules could not be simpler. First, a termination condition must be true. Second, the trigger lines must roll in the opposite direction. Finally, an entry will be placed at the magenta market flow high volume line for shorts, or green high volume line for longs. In this picture from the trading plan, a short trade is illustrated. First, the large chart on the left has a termination of trend at Fibonacci resistance. It is also especially important to recognize on the large chart the location of the trigger lines at termination conditions. When the trigger lines fail to be located above the red Fibonacci, the area is anticipated to reverse the market. This area of termination is further strengthened by a termination condition on the small chart. This chart has a pivot stop out of prior divergence line at Fibonacci. Again, notice trigger line location on the small chart has not violated Fibonacci resistance. When both large and small charts have separate termination conditions at the same spot, you will have the best chances for trades in the opposite direction. A trade may be taken with only the large chart termination condition, but when both large and small charts agree, the odds improve. Finally, on the T3 market flow volume chart, you will notice the magenta horizontal line. The order to sell is placed at the magenta line. It is important to note, the magenta line is the only plot from the market flow indicator that we use at tops and bottoms. Remember, first target areas are generally as you reach the first mid-band. A word of caution, please do not try to analyze every bar, dot, or color on the T3 market flow indicator. Only use a reversal bar from this chart for trend trade entry confirmation, or high volume areas at tops or bottoms. It is important to ignore the market flow chart, unless the rules for an entry are true. Please take the time to review the T3 market flow volume analysis video on the education page on the website for specific details on why different plots happen. Remember, you only need to know when to trade market flow to be an effective trader following the rules. This illustration defines both trades you should focus on when learning to trade the Nexgen T3 Fibs ProTrader software. The first two trades in our trading plan are depicted in the following picture. Starting at the top left, you will see that Fibonacci resistance red line reverses price without trigger lines breaking above it. Once the trigger lines are pointing down, the order to sell the market will be entered at the magenta market flow high volume plot. Once the trigger lines are extraordinarily strong and in a downtrend, this is the time that a trend trade will be placed on the small chart. Remember, the entry is at both small chart large triggers that include Fibonacci, mid-band and/or 1-to-1s. Exits for trend trades will be placed at Fibonacci support. From the Fibonacci support low, you will see a termination of the downtrend. When the trigger lines roll to the upside, orders will be placed at the green high volume line in the same location as the trigger lines. Once the trigger lines are extraordinarily strong up, this is the time that a long trend trade will be placed on the small chart. Remember, the entry is at both small chart large triggers that include a Fibonacci, mid-band and/or 1-to-1s. Exits for trend trades will be placed at Fibonacci resistance. During your demo and the coming months with Nexgen Software, you will learn to read the Fibonacci and trigger lines accurately and confidently. You will simulate the rules in the plan, first, without taking any financial risk. You will then spend time practicing and perfecting the first two trades in the plan. You will use the platform to download replay data and replay each day. This will allow you to study, retrade the day, fixing mistakes made during the day. You will take a picture to keep for your records, using the trade tracking spreadsheet. Also, when possible, post those pictures in class for feedback. Finally, the most important thing a trader can do is make sure that they are 100% proficient executing the plan properly, guaranteeing themselves profitability, before trading live money. Please visit the education page on our website, download a copy of the trading plan, educational syllabus, and spend time reviewing the detailed educational videos. Welcome to Nexgen Software Services. We look forward to helping you achieve your financial goals.